Hi, my name's Phil Hoskins, Managing Director of Evolution Energy Minerals. We're a Tanzanian graphite developer with a development-ready graphite project that's predominantly coarse flake. We're also looking to become a vertically integrated supplier of battery anode materials, at first into the US market. Sustainability is a very important thing for us. We've got a resource with a lot of growth, and we're development ready, subject to finance.
Phil, thank you very much for the introduction. Good to meet you. So, what a company, what a project! You've just put out your feasibility study, your DFS. Could you talk me through the headline numbers on that? Let's just kind of get the building blocks of the project kind of on record.
Sure. So the DFS is just based off reserves. It's a 17-year mine life at just over 50,000 tonnes per annum of concentrate. The net present value is just over $330 million US dollars, an IRR of 32%, EBITDA of just over $70 million per annum. So quite significant cash flows driven by product quality. And in graphite, it is all about product quality. We've got a substantial proportion of coarse flake graphite, and the 101 on graphite is the larger the particle size or flake size, the higher the price. So we've got substantial proportions of coarse flake graphite, driving high margins, high sale prices, and that's one of the largest or contributing factors behind the economics.
Good. And the CapEx on it is 120 million US, is that right? Or 120 Aussie?
Yeah, sorry, yeah, 120 million US dollars. Obviously, this is an updated DFS. Our first DFS was in early 2020, so that has come up as expected during the inflationary environment we're in, from $87 million 3 years ago, so quite consistent with the inflation you'd expect on a project being built in Africa. And but as before, the 120 is an executable number, we believe.
What was the? I know we've had a global pandemic, but what was the kind of the key delay between, DFS 3 years ago and where we are today? Why wasn't it built then, and why aren't you in production?
Yeah, look, I think it's a story that could take a bit of time, but I'll keep it to a couple of minutes. We were previously developing the project as a company called Crux Mining. I've personally been developing this project for 9 years, and we had a funding deal with a group called Castle Lake, a private equity group. That deal was actually a short-term debt followed by a longer-term debt and equity funding package that was going to build the project. And unfortunately, when we delivered into the conditions of the shorter-term debt, Castle Lake, COVID hit, and Castle Lake were one of the largest owners of commercial aircraft in the world, and those aircraft were being grounded. And as such, as was their entitlement, they didn't want to go ahead with the larger financing, so we had to restructure it. Ultimately, the restructuring was Evolution, newly listed company, acquiring the asset and being able to extinguish that debt. So it wasn't a fault of the project. Having said that, compared to 2020, where we're at in 2023 is a completely new world from both a Tanzanian perspective and from a graphite market perspective. Tanzania, under the new president in the last 18 months, has become a much more investor-friendly place to be. Historically, it's been a fantastic mining jurisdiction, but there were some challenges under the Magufuli rule. And from a graphite market point of view, I guess the battery market's always sort of been threatening to come, but it has arrived, and it's now up to 50% of the graphite market, and incredibly exciting about what this next few years is going to hold.
I do want to talk about graphite and its role in the batteries and its role in the wider graphite market and the maturity of that industry. But just, can I get back to the project and the kind of the way that you're going to be financing it? Because when I look at the share price, the share price is under pressure. You were, I think 3 years ago or 2 years ago, you were up at 50 cents or higher, and you're now at 23, 24 cents. So the project's evolved, the market's evolved, but evolution, but not just evolution, but junior mining as a whole. I mean, if you look at any of the companies that are trying to provide these critical minerals for the energy transition and electrification, whether it's nickel or cobalt or, yes, gold as well, but the junior sector's been crushed by lack of available capital. So for me, that's almost the number one issue is where does the junior sector get capital from? And I just wondered, for you guys, what happens next?
Yeah, it's a very interesting point. I think we have a slide in our presentation that actually shows the top 10 ASX listed lithium companies by market capitalization now and every year over the last 3 years. And I'm sure you'd sit there today not scratching your head around how a lithium project would get funded. You'd go, well, that sounds incredibly easy, but so today they're valued at 35 billion, but only 3 years ago they were valued less than 3 billion, and I'm sure even then maybe they wouldn't have thought it would be challenging to finance their projects. But that is where graphite sits, is it's lithium a few years ago, and I don't think there's any doubt that the sector in general could use a lift, and I believe, and when we talk about graphite, I believe graphite is the next one to go in that battery space. I think in general with financiers, there's an education to take place. I think graphite is a little bit more challenging to understand than other commodities. You've got different flake sizes, you've got higher purities that can result in higher prices, you've got various downstream products from spherical graphite for batteries to expandable graphite, micronized graphite, purified graphite, graphene. The list is endless, and I guess historically companies have always put forward the argument that best suits their story, and I guess as well the other elephant in the room was Syrah Resources. They were the I guess the darling, if you like, the first into production, and I'm sure they would admit firsthand that there were some mistakes made along the way there, and the product they produced was not what they thought they would be able to produce. And I think from a marketing point of view, the strategy to come in with such high volumes of unqualified graphite at the time into a market that wasn't ready meant that they had to sell into refractory tenders and low price things like that. So you've had this, the big behemoth have struggled. Their production has stabilised, however, and I think when we can talk about the market a bit more as well, it's how are they now a $1.5 billion market cap company? And I think the thematic into batteries is still incredibly strong. And how will we specifically get funded? We have a number of expressions of interest from Western banks. We've got a group called Auramet running our debt advisory process. Mark Tyler from Auramet was head of Nedbank's resources financing for 15 years. He's running ours. He's also running OreCorp for, they're a Tanzania gold company, and our expectation is that 50% of the funding will come from Western debt providers. That's South African, European, Tanzanian. The balance is to come from equity, and one thing that we have on our side in that regard is a 25% major shareholder, the Arch Sustainable Resources Fund, whose stated position is to follow their money through to FID, and they're an ESG fund out of the UK and the capital to do that. So I think as compared to a lot of companies, certainly at this market capitalisation, we're not pushing the button on a financing tomorrow. So we know there's work to be done promoting the company and also educating on the graphite market and where we sit within it.
Great, thank you. That's a really helpful answer. So, in a sense, the work plan for this year, as if I can read it right, is the feasibility study work is pretty much there, but you're doing commercial contracts, working with the government, trying to get your final agreement, stabilisation, and you're permitted for production, aren't you?
We are. So I'd say the big work and milestones have been completed. So the DFS signs off on the technical work, and that work's been done to a high regard. The framework agreement, which includes the stabilisation and those sorts of things you mentioned. So we've got a mining licence, we've got environmental approvals. The framework agreement is what delivers fiscal stability and stabilisation and sorts out the free carried interest, and we've agreed the terms of that and we're expecting to have a signing ceremony with the government, with the president, in fact, in the first half of April. So that's the final milestone for the debt providers. We appoint an independent technical engineer to review our study on their behalf. I'd say the on-the-ground activities, I'm quite confident that this mine will be financed, whether it's in the coming months or the coming year or whatever. It's a very high-quality project that is deserving of being financed into this growing graphite market. So we are moving ahead with making preparations for what are the critical path items for this project, and they're quite light on the expenditure side. The next 6 months requires us to conduct the relocation of affected individuals, and under IFC guidelines, that's a 6-month process to notify, build new housing and those sorts of things. So for a couple of $1 million at a 6-month process, that's the critical path, as well as later this year commencing the detailed design from an engineering point of view. So they're the main on-the-ground activities. As I said, they're capital light, but as a company, one thing we're really going to turbocharge from here is the pursuit of vertical integration. Through last year, we determined the suitability of our fine flake graphite for use in coated spherical graphite for lithium-ion batteries into the anodes, and over the remainder of this year, we'll commence a feasibility study. We're very advanced on site selection. We want to advance qualifications with customers to the point where we can announce MOUs and offtakes, and that whole strategy is around pursuing downstream processing at this stage in the US, and targeting non-dilutive government funding to help fund that. And in the end, I think these vertically integrated supply chains, that can be how a number of the mines get funded, because there is a lot of funding sitting down at the downstream processing end. Governments, OEMs and electric vehicle companies and the like, that money does need to make its way upstream to mining, because this EV revolution doesn't occur if there is no feedstock into those processes.
And I could also imagine that there's your traditional equity supporter of let's say CapEx funding for the Chilalo project itself would be more comfortable knowing that there's a downstream facility, kind of vertical integration, which is ex-China, because I mean, we can't ignore the geopolitical nature of the way that graphite in particular, the rare earths, so many products are being refined in China, and there has to be some domiciling of refining capacity in Europe and in the US for geopolitical reasons. Yeah.
No, absolutely. So those financiers, so I was going to say, offtake is very important to debt and equity financiers. We have, for our coarse flake graphite, a binding offtake covers about 70% of the concentrate revenue, with the global leader for expandable graphite and graphite foil. But then on the fines, that remains uncontracted, and intentionally so, because we want to, as we said, take that into vertical integration in the US. And your point about geopolitics is a very good one. More than any other battery metal, graphite is dominated by the Chinese. 3/4 of the mining to concentrate stage, as well as 100% of the current processes to go to anode material. So there's purification to battery grade, there's milling and shaping, or spheronization as it can be called, and coating. Now some coating happens in Japan and Korea, but those first two steps all happen in China, and given China is now moving to become a net importer, they're seeking to take the flake graphite from around the world, process it in country. It's a deliberate strategy to dominate the lithium-ion battery supply chain, and this is what's caused Europe and the US, who are all very concerned post-COVID, and for Europe post-Ukrainian war, to understand for all of these critical minerals, who are we reliant on, and what do those supply chains look like. And that's why we're seeing incredible funding like the Inflation Reduction Act has promised late last year.
But just in terms of you're talking about the Chinese production and the kind of on the growth of the market, Do you see the graphite supply chain as being a kind of a mature supply chain? As you know, is this an existing industry that's been operating and at a high level or a high output for many years? And do you feel that there's supply inelasticity because of that?
Yeah, that's a good question. If I could just split it between coarse and fines, and I'll start with coarse. Historically, coarse flake graphite came out of Shandong province in China and various other places around the world. But China's been producing 70 to 80% of overall graphite for a long time, and it's not a mature industry. It's quite a fragmented industry of miners and downstream processes and things like that. But I think that the supply chain most of your listeners will want to hear about will be the graphite supply chain, and again, it's not a mature thing by any stretch. So you've got a bunch of miners through China. China's graphite, post Shandong shutting down for environmental reasons, is predominantly fines, but China is now importing fines from Syrah resources in Mozambique and from Madagascar as well. So those imports have trebled in the last 12 months, demonstrating the scale at which they're happy to hoover up all of the flake graphite to be able to add the value. But I guess that supply chain, as I said, 100% of it has gone through China for the purification and the spheronization. And you do have large-scale companies like BTR, New Energy Material Co., the largest anode material company in the world, based in Shenzhen in China, and they supply Panasonic and everyone else. And it's as I said, a supply chain that is heavily dependent on the Chinese, and something that Western countries and end users are looking to diversify away from, and that only spells good news for new sustainable graphite production coming on board or online outside of China, but with a strategy to take it from the mine site directly to downstream processing in US or Europe for that matter.
In your presentation, you've got that slide which is kind of saying, is the graphite going to do a cobalt or is it going to do a lithium? I think one of the data points where you spoke about was kind of 50% of the market, batteries being responsible for 50% of the market, and you mentioned 50% earlier. Can you just kind of unpack that a bit, please?
Yeah, it's something that we would get asked a lot. Why, given graphite is 7 to 10 times more mass in a battery than lithium, why hasn't graphite gone through the same commodity price increase and those sorts of things? And Benchmark Mineral Intelligence shone a light on this in Benchmark Week in November 2022, talking about how graphite had a substantial market before batteries came along. So your traditional industrial markets, graphite used in refractory bricks and the like, was a large part of the market. Cobalt and lithium had much less markets, had much smaller markets before batteries came along. So that chart shows that batteries became, I think it was 40% of the cobalt market back in 2016. And as it grew to 55% of the market in the following 2 years, the cobalt price went up 3.5 times. Lithium, very similar inflection point. Back in around 2020, batteries reached 45% of the lithium market, and in the following 2 years, it became 65% of the lithium market. So again, it was that inflection point through there where lithium price has gone up 13 times. Now, graphite is just approaching 50% of the market coming from batteries. It's projected to be over 70% in the next 2 years. And as we've seen in those other commodities, this is a time that batteries starts throwing its weight around. The sheer volume required, I expect, is going to increase both flake prices as well as the anode prices. There's been a substantial underinvestment in new flake graphite mining and in the anode processing, and I think it's far too late to avoid a lithium style price increase. I don't think it will be as savage as lithium's, but it's unavoidable that there's going to be price increases in the commodity, and that's why we're seeing so much stronger inbound inquiry from funds and brokers. But I think it's that thing that inbound inquiry started, but it's educating the market on why different companies make sense and those sorts of things.
Thank you. Yeah, wouldn't it be nice to get a lithium style kick to the price? I guess there's a degree of macro uncertainty at the moment, with the banking crisis, and it all just feels a bit shaky at the moment. So yes, you might get the strong fundamental upswing, but there's also it feels as if it's a bit drafty in the global financial markets at the moment. Moving to the US and the kind of the vertical integration plan. You spoke about the kind of the value being in the higher margins being in the coarser grain product, but is there not value in the spherical purified graphite, in the kind of the downstream products of that chain? And how much does it cost to get to that product? What kind of CapEx figures are you looking at and timelines?
Yeah, absolutely. No, you're right. And so I guess when I'm talking about the higher prices, I'm talking about just at a mine level. If we're just talking about mining, just talking about concentrate, we know that if you don't have coarse flake graphite, your mine is not going to be making any money. And that's not just me talking my own book. You can look at Syrah Resources. 85% of the concentrate is fines, and they're at break even or just shy of that. And so I think that's a relatively tried and tested point now, is that if you don't have coarse flake graphite, your mine itself's not going to make any money. But like I said before, Syrah is a $1.5 billion market cap for a reason. So whilst the mine's not making any money, the feedstock into downstream and the money and non-dilutive funding they've attracted, the Tesla offtake that they've attracted as well. Certainly the size of the prize is significant. And in terms of what are the economics that look like to get there, whilst we've done test work to determine suitability, it will be a feasibility study that can derive those numbers. But if you wanted to work off my high-level understanding of Syrah's numbers, I think around 30,000 tonnes of feed to produce 11,000 tonnes of anodes. Their number was 165 million US off the top of my head, and operating costs of $3,500 per tonne. Producing, I think, a product they were looking at pricing around $8,000 a tonne. I feel like there's a Tesla discount included in those sorts of numbers, because our understanding of selling coated spherical purified graphite into the US, we wouldn't be looking to do so for anything less than 12,000 US a tonne. So there's absolutely fantastic margins. It's not a huge capital cost compared to, say, a downstream lithium hydroxide coming in at the billions. So we're talking about a substantial value add. We're talking about a market that is, again, crying out for new investment. That investment is likely to come partially from the US government themselves. And so if you can get the US government paying for half of the funding as they're throwing out through non-dilutive grants and things at the moment, if your NPV was $500 million, your equity NPV is twice that. It would be $1 billion. So the value to our shareholders to invest into that downstream business could be significant if partnered with government funding. So I think, no doubt, that the value is there and the opportunity is there. And the questions then for us, we know the product's suitable. It's partnering with the technology, and in the coming months we'll be able to talk about the technology partner with whom we've been doing the test work, and they were the first group in North America to produce coated spherical graphite on US soil. And if you can partner with that technology, then the world's your oyster. You've got a product that's suitable, you understand the markets and those specifications, and they're the elements you need to be successful in that space.
It almost feels that kind of where the junior resources space is at the moment, and kind of these depressed stock prices, your DFS came out and it didn't have a transformative effect on your share price. It almost feels as if this is kind of a critical steps? I know you've got the commercial offtake into China, which is fantastic, and that covers 70% of the mine revenues, and that's great. It almost feels as if that the firming up the US side of things is going to be that transformative value changer for your company.
Yeah, we certainly hope it is. And there was another DFS released on the same morning as ours, and they had a very similar muted response. So we had a good intraday response, but unfortunately in this market, providing a liquidity event to some investors is too good to be passed up, unfortunately. So we've got some analysts coming out with some research coverage in the next little period, and I'm confident that with the general upswing in the market, we'll be able to get some traction. But certainly, I don't know how well the Australian and market generally truly understand the scale of the opportunity, not just in the US. Europe have announced the Critical Minerals Act. They've announced the aspirational targets on critical minerals processed within Europe or sourced within Europe. The funding, I think, is still going to take some time to come, but the US have really just sounded the warning shot here. Every country, if they're going to be competitive with trying to secure this downstream production, are going to have to come up with similar packages. And as I said, being able to come out with some of those sets of economics, which is still some time away for us, for our company, but and then positioning ourselves for that funding. And certainly what we're hearing is that funding is going to be there the next year, it's going to be there the following year, and it's going to get more and more attractive as we move forward. And we've got some key appointments we're looking to make in the near future that are giving us some of that intel. And I think that's when investors will be able to see not only is there an upstream mine that makes excellent margins at current prices, driven by that coarse flake graphite, but the fact that they have the fines available to go downstream and appear to be positioning themselves with the technology groups and people we're about to bring in, then I certainly think that a light bulb moment happens at some point, and I'll obviously have to promote the company as best I can so that that opportunity is understood.
Thank you. I've got a couple more questions, and one of them is about the technology in the US. You know, talk about a technology partner. You spoke about one group that was able to do it. Has it been a massive learning curve for the US companies to try and kind of match the Chinese advances?
The company we're talking to, the founder has been in advanced graphite processing for 25, 30 years. So there are like companies like Superior Graphite and Asbury Carbons have been a mainstay in the downstream graphite processing game for decades. Asbury's been around for 100 years, family-owned business. So there are people outside China with that expertise, but maybe not without the commercial experience at scale like the Chinese have. So I think the technologies these days are relatively well known, although they appear to be changing. I think historical purification has come by chemical purification, toxic hydrofluoric acid. Given this has taken place in China and the environmental restrictions have been much more lax there, then that's been the purification method of choice. It's quite nasty, toxic stuff. Syrah Resources have borrowed Chinese technology and are employing a similar route. The milling and shaping is one where you've got to do the work. There are a number of different technologies, Chinese milling technologies, German, Japanese, all with different pros and cons, and obviously different CapEx, OpEx, and different yields into finished product. And we've been working with a group that's achieved fantastic yields into finished product. And I guess from our technology point of view, we would like to stay away from hydrofluoric acid. We need the numbers to tell us that that's what we want to do. But we believe that thermal purification, given graphite's high heat resistance, heating the graphite up extremely hot in a furnace, this can melt away the impurities. The test work for us has shown we can get to nines, 99.9995%, which is an incredibly high purity. But doing that in a renewably powered environment and a low-cost power environment, that, in our opinion, can leave us as potentially a cost leader in the space. And if you can take what we intend to be very close to net zero concentrate out of Tanzania into renewably powered and thermally purified graphite in the US, then in my opinion, your end-to-end supply chain into battery anodes is as sustainable as any on the planet. And we can't ignore sustainability going forward. And I guess the cousin of natural spherical graphite in the battery anodes is synthetic graphite, and this is produced from graphitizing or heating the byproduct of the oil industry, petroleum coke, at very high temperatures for long periods. It's an incredibly high carbon footprint, and so as battery manufacturers around the world seek to lower those footprints and try to deliver into net zero aspirations of governments, we can't underestimate companies like us being able to deliver a very low carbon solution for them. And longer term, I believe that will also command a premium.
Sounds like you need to be next to a renewable nuclear power plant, because that's, for me, is the most renewable of all. But before we get into the thank you for that. That's a really helpful answer. My other question was, you've sized your output to have a mine life of 17 years. You've just worked on the reserves. Looking at the geology, it seems as if you've got a much kind of bigger potential there. What's the discussion about expansion or perhaps reducing your reserve mine life from 17 years to, I don't know, 8.5 years, double the throughput, and then work on the resource growth to get back to your 17 years, but at a higher output rate? You know, is it a market thing or is it a CapEx thing?
At the end of that question, you hit the nail on the head with both of the reasons why we stayed the same. We wanted to keep the capital cost as low as we could. And if Syrah has taught us anything, as much marketing work as we've done, it's that trying to sell 100,000 tonnes of any signature of graphite out of the gate is challenging, or would be challenging. And so we wanted to ensure that selling a number like, will probably be closer to 60,000 tonnes in the first few years, but being able to make sure that we can sell all of those tonnes and make sure that we can repay debt or early cash flows as quickly as possible. But yeah, keeping the capital costs low. We're far lower than our peers. There's some with $300 million US plus, and whilst we're talking to banks that want to finance graphite, they're also not wanting to sort of jump into the water to that extent, I don't think. And so we think that we're the high margin, low CapEx, the marketing work we've done. We've also, I've omitted to mention, we've got a guy called Michael Bourguignon on our exec team who built Syrah's Balama project. So we've got someone on a project execution that's actually done this in the graphite space. And having someone like Arch as a project sponsor, these are the 5 things I mentioned in my quote to the announcement, that the reasons why the banks are interested in doing a deal with us. So yeah, CapEx, market, but then you do ask the question, well, what does it look like long term? We did some drilling towards the end of last year. Those results will come out soon. So there's 33 kilometres of conductive trends that we know are graphite. If they're not graphite, they're going to be massive nickel sulfides. So, but as much as that would be a good result, I'm almost certain that it's graphite. And so we know we'll be able to double production, triple production. And that's really important to be able to grow with your customers' needs. Customers can spend a couple of $100,000 qualifying a graphite signature into batteries or expandables and foils, and they want to know that if they've got a growing profile of sales, that we can grow with them. And I think Blind Freddy will be able to see that when we start releasing results, and you can see the length of some of these trends, that we will be producing graphite for many years to come.
So just to wrap up, could you block us out the kind of the news flow for the rest of the year? We've got kind of 3 quarters left to go. Just kind of give a summary of what you're aiming to tell the market.
Yeah, so this is obviously the end of March right now. So I think in the near term there'll be the drill results. We've got some sustainability related things, Digby ESG assessment and our sustainability report, signing the framework agreement with the Tanzanian government in April, and then many announcements on the downstream side. So we've been working very hard under the hood on all of that. So I think the branding, the key appointments to drive it, the announcement of the technology partner and the arrangements with them, potentially scoping study level numbers, and then the commencement of a bankable feasibility study, and also landing on the site selection as well in the US. So there's a lot of things there. I think from the mine level, there'll also be the commencement of the relocation of affected individuals and detailed design, and updates on our project financing, all of those banks running their due diligence and the independent technical engineer reviewing on their behalf. So we're very busy, but it is quite simple. It's a mine that has high margins and is low CapEx into a market that we believe in the next 12 to 24 months is really poised for some drastic price increases, and I think a vertically integrated downstream strategy that I believe is perfectly positioned to apply for US government funding, and we've got a board that will roll with the punches there and not try to push the button too early to dilute our shareholders, because I believe that the deals are only going to get better. There will be partner funding and off-taker funding around the place, and so we've got to do what's best to drive long-term shareholder value creation.
Phil, thank you very much. Good luck with the year ahead.
No worries, thank you.